What up, everybody? It's Lonnie with Charts and Labs. On a repeat back-to-back video, I kind of had this one on the back burner that I've been looking at wanting to do because I was also wanting to talk about the dividends, and it goes hand in hand with the safer investment strategies. Before we jump into all the details, remember this is not financial advice. This is just my experiences and my opinions to help you get some familiarity with markets, investing in yourself, and handling your wealth building on your own. Um, Again, no charts on this one. This is just an idea kind of thing, and there's ways to do it. So I guess I don't want to say no charts at all because obviously we can see gold and silver, and they're hitting all-time highs. The cool thing about gold and silver, excuse me, and some of these other precious metals is that um, instead of just buying the paper like a paper share of something, you're actually buying the physical asset. Um, and then that physical asset brings in the utility factor, and that's where a lot of these actually have a lot of value. It's not just in their scarcity and their store of value that we've determined, but also they have a lot of utility value. Gold and silver are big key components in electrical and technology tools and uses, and then a lot of these other ones are as well. So, kind of what I wanted to show everybody is that it's not just gold and silver and copper that you would think of as the immediate ones. These are top 5 metals according to ChatGPT that you would want to consider holding in some type of investment portfolio, whether it be a physical asset or if you want to, there are ways to find these in the markets and buy um, and invest in just the futures value of it. Sorry. So we got uranium. Why this one wins is a nuclear energy revival. Uranium is needed for these AI data centers and the grid stability. The nuclear reaction is going to be a energy utility, so there is value in uranium. Obviously, you're not going to go out and buy a bunch of uranium and hold it, but it's something that obviously has value. One that you can actually hold the physical asset is copper. Um, Copper, was used for pennies for a long time, but copper is another big for piping and whether it be electrical, for wires, or for plumbing and stuff. So not only do these AI data centers need the plumbing, but also you need the copper for the components. Silver and gold have a higher conductivity, but they also are very expensive because of their scarcity. So copper gains some of that value by being not as expensive. So then we jump from copper. Dr. Copper has reason. Then we jump into lithium. This is where all the EV batteries are. It's kind of the modern oil. A lot of lithium mines going on. How to how to recycle these batteries and make sure that they're gaining value for a longer term. And then we jump into another precious metal, platinum. Historically, is cheaper than gold, and used in hydrogen fuel cells. So obviously, there's the utility factor in that, but it's also used because it's got low allergens. So for jewelry, obviously, it's got cool factor to that. But it's also, you see a lot of, you see some tools used where you have to be very clean. Platinum is a very clean metal. Um, Historically was above gold in value. That hasn't been that hasn't been lately. And then palladium, critical for the catalytic converters. This is why everybody is saws on and hacks on everybody's exhaust, is to get the palladium out of them. Palladium had a 2,000 plus run back in 2016 and 2021. So we look at uranium, copper, lithium, platinum, palladium. These is what ChatGPT says are metals and minerals that we should look at that have pretty safe volatility, long-term demand, and utility factors, so they have great return. Hold gold for insurance, trade silver for leverage, invest in uranium and copper for structural growth. These are going to be your big time energy and data center kind of plays. Speculate on lithium and palladium. Lithium, of course, being as EV adoption is the primary source for that one, and battery storages. Um, but the one that I'm very big on is antimony. And of course, so I asked it about antimony, and it says, "Hey, great poll, good job. You know what you're talking about a little bit." It's kind of a sleeper commodity. The reason that this one is it's very much needed in a lot of utilities. It's used in the flame retardant. It's a battery alloy. Semiconductors and defense tech have to use it. It's in the chips in the semiconductors, and then it's hardening metals. Um, Critical and industrial alloys. The real reason investors should care. This is where the stock play that I like a lot, that is kind of under the radar but has recently been getting some attention since the summer when I first found it and started getting into it, when we were down in the $12 range is when I first got into it back in July and August, and we had a huge run up here to 31, came back down and is building back up. Perpetua Resources Corp is a mine in Idaho. So it's U.S. based. They have gold reserves that they've already found and discovered. Um, Silver will be a byproduct, but antimony, they have large, fine deposits of antimony. And antimony is normally looked at as a byproduct when mining for gold, and it's kind of like the excess that you find. But there's a big deposit of it, and this is a very important piece because antimony is an asset that is extremely, or as a commodity that's very much needed for the growth in these tech stocks, and 70 to 75% of it is in China. Um, the rest is fragmented, aging, and geopolitically risky. China has already restricted the exports of it. They know that they have the keys to the car, and they're not letting everybody else drive. So there are almost no new mines except that PPTA one, the Perpetua Resources Corp. Price history is deceptive. Stays boring for years, and it suddenly has a 2 to 5x when supply snaps, then markets violent repricing. So because we have not a lot of news on it, PPTA stock and their gold and antimony. So we're using ChatGPT together to learn as we go through this. A little bit of a different pace compared to going through the charts. Obviously, we could look at this and look at points that we want to get into it. But a big driving factor in something like gold, silver, or antimony, or a mining stock is actually that you're not looking for the like the pattern of the price to get into it, because it's very news driven. The discovery of the gold or discovery of antimony, the build out of the mine, and the yield are all going to be way more impactful than the trend of the price. You're not going through and looking for patterns um, or like an earnings event that's going to trigger a price move. It's solely on the discovery and stuff, so it's very kind of erratic. So these are stuff that you don't really try to time with options, or you don't be like, oh, I really need to get in before January, because the price is going to fluctuate a lot. But when you get in, typically then they run hard, and then once they have the discovery and then they have the build out of the mine is fully constructed, and they're having steady yields, what they kind of become is more like a dividend yield, where they just become very steady and a good buoy in your portfolio. Company overview: they're headquartered in Boise, Idaho, focus on exploration of gold, antimony, and silver deposits, formerly known as Midas Gold Corp until a rebranding in 2021. If you are in Canada, there's your TSX, flagship asset, gold project. Gold, one of the highest grade open pit gold deposits in the U.S. With gold prices being extremely high, this is extremely bullish. And then here we go. Antimony is a critical mineral with strategic importance for defense, energy storage, and industrial applications. According to project data to date, there's 4.8 million ounces of gold in reserves, and there's 148 million pounds of antimony in the reserves, designed to produce roughly 450,000 ounces of gold annually in the early years. And looking at the price of gold, at $4,400 an ounce. That's a lot of money. Um, Gold exposure, drivers gold reserve scale. The project is structured around high-grade gold-bearing zones, gold revenue underpinning, gold commodity tailwinds. Gold typically benefits as risk-off inflationary assets, so gold is very valuable right now. So this mine becomes very valuable. Investment consideration, gold production metrics and price forecasts heavily influence the project valuation. That'll be once the mine is built out, the construction is built out, and if they're making that 450,000 ounces a year to get that price. Um, so antimony exposure, strategic and critical mineral. This is very important for the defense applications, for munitions, flame retardants, and the chips. I'm gonna say it over and over and over again. The chips. It is a big, huge factor that these guys need. As many of these components as possible. Elon's touched on it a couple times that nobody is going to be able to maintain the demand for these chips. Not one single entity. It's going to be a combination of everybody. Few advanced antimony reserves outside of China. Very few. So this is going to be in very high demand. Something to definitely bolster its value on top of gold. Gold is very valuable. Affirmed efforts to secure downstream antimony processing, engagement, stock, and capital market contacts. PPT has shown strong price appreciation over the past year. Notable percentage its stock price and trading ranges suggest high volatility. There's also some very big billionaires who got into this that have huge investments into this property, into this mine. Significant funding, strategic equity. So the other mine mineral company that had antimony or had these kind of minerals and stuff had a huge government stake and an Apple stake at the same exact time where they came in and the stock went up like 50%. And I want to say it was I don't remember the ticker. Let me see if I can remember it. While we're on video, look at this. Catching me in my raw element. I'm trying to figure out what I remember. Execution, PPTA, gold leverage. Is it MA? No, that's MasterCard. A gold leverage play, critical minerals play, and U.S. strategic supply. So that's why this is a good one to have in your portfolio. It's got gold, which is safe value that's going to be building, but it's also got huge upside. Oop, I didn't mean to do whatever that was. It also has huge upside with the antimony and the other minerals. Silver is going to be a big player in electricity, and a lot of times when they're a gold and silver mine, they typically get copper too. So a lot of minerals that are going to be needed for data centers and such. And then you also have the defense contract with antimony being used in so many applications. Let me see. I'll just ask it. Who was a pure mining stock who jumped on Apple and government stake? MP. God, I knew it was close. These guys had a huge jump when Apple agreed to buy $500 million investment of their rare earth magnet supply, and then the government also on the same day did the same thing, acquired an equity stake in MP Materials. So this is a peer that is very close to what PPTA is, and when we jump into this, we're going to go to MP Material, and that's them. So what I'm talking about on their big move was this move. Let's look at this on the 15-minute, get a little bit closer. And we went from, no, I think it was even before that. Go to hour. Let's do daily so we can see big jumps. Where's the big jump? There's a big jump. Let's see what happened here. There, see all those gaps? So here we are chilling at $30 share price. Government or Apple comes in, and then oh man, we jumped all the way up to 45, and then the government comes in and jumps up again to 58. So that this is a and now it's kind of balanced back in that price, which is kind of ironic how these gaps always want to fill. But if we do like that, top of this one, bottom of these ones. So now you're back in like a normal range to invest in this if you were looking to. This is one of the things where you don't chase the rabbit after it's running, um, because this gap up and then even this gap in here, this price had to come down and rebalance to fill in this zone. Even though the news is positive and it's worth this value, according to most, and it would be hard to argue against that because such great news had changed. I'm going to change one of these to a different color. Um, so here you are. Now this is going to be resistant. Both of these points are as we come back up. But these should be a magnet to see the price coming up once this is filled in on this block. But I wasn't showing MP to show um, a good investment now because this one already happened. So would you? This is chasing something that already happened, or the next, in my eyes, my opinion, if you look at PPTA, this one is the next potential that could have that discovery and have that kind of move because it's gone up very strongly, purely off the fact of the value of gold and the other mining plays, but also because of that antimony. I don't like that one. Let's go to that one, and then we'll play off this one too. So this trend line, if we can buy as close to this line, this is a good add. This would to me is a good add in that range. Obviously, if we can get more aggressive on these ads, and we'll make this one be purple, and then this one will go to that one. And then we have a nice parallel channel. As you know, I'm a big proponent of finding the parallel channel within the price range because this is your support, this is your resistance on the move up. This one's also not going to necessarily follow that very defiantly because it's likely going to do something like this when there's either a large discovery of gold beyond what it's kind of projecting, or the antimony, whether the government comes in and buys it, Tesla, or Lockheed Martin. There's so many people who could come in for something like PPTA, the NVIDIA, or AMD, or anybody who needs the proponents for their chips. Could be all over this. The government needs it for the defense track. So that's why I mentioned Lockheed Martin and some of the other defense sector stocks. But mining stock. So this is kind of a double dipper. One, we're looking at something that has a huge potential of a breakout of a crazy gain, but it also has the safety of gold and silver as long-term stores of value in times of uncertainty. We're at inflationary concerns and the AI bubble and all that stuff. So people are looking to find gold and silver as safe places to put money. Well, the only way you get gold and silver is if you can mine it. So these guys are always going to have it because they're mining it. And they also have the explosive upside potential of antimony. And that's why I really like this play a lot. I really, really like this play a lot. So something to put on your watch list and take a peek at it. If it's something that you like and you're interested in, one, getting some exposure to the mining minerals, but you're also looking at the the safety of gold and silver, but you're also looking for a huge breakout potential that still has also some exposure to the tech stocks as well. PPTA is one to consider. As far as trying to play the options side of it, because of that surprise factor of you never know when, and then it just doesn't have that kind of interest and volume. It's not one that I would play on the option side unless you're looking at buying like really far out, far out options. So as we come in here into the options chain, we don't want to look, and you can see that these guys don't have weeklies. So if you're either buying January, February, March, there's no April, and then you get May, June, no July, you get August, no September or October, and you get November and January. So because it has that lower interest, it's something that you have to be mindful of. But if we go to like May, there's not a crazy amount of um, there's not a lot of crazy. They're all $5 gaps between the prices, so these are going to be expensive plays, but not a bad one to position into. But for plays like this where you don't want to try to time it and you don't know exactly when it's going to happen, I recommend just getting some shares and getting some exposure and kind of following it, and then you can look at it in the, let's go to like an hourly, and you can see there's a lot of gaps and jumps and moving in the price, and it's big rallies followed by some fade and then some gaps and real choppy. But if I was looking at this one as one that I wanted to buy, you buy in the momentum, and you can kind of let the negative trail, and then as soon as it goes gray or it kind of slows down and kind of balances out, those are good times to add. So as we just pivoted over momentum and we're over this volume weighted average, and we're leaning buy side momentum right off the bottom, this would be a play to add tomorrow and probably to end the rest of the year. I don't think we're going to see much information. Look, we gapped up and then it faded down, and now it's going to work back up through that gap. So this is a good example of gaps get filled, and we're looking to see. So to me, if I'm trying to build a position into this, in between 27.97 and 28.52 is a good adding zone. Of course, I don't mind adding cheaper. Cheaper is always better. But let's say, hypothetically, we're going to make this middle one be a different color, and we're going to call that one purple. So if I'm looking at this stock and I'm trying to build a position because I want to be in a position when they have the antimony discovery, they get a contract from the government, or a chip maker, they have the gold and silver, so the data centers are going to be in high demand. I'm looking at between 28.50 and 26.30 as my adding zones, and ideally anytime that I can get it under 28, I think it's a steal. And if it's over that, I kind of ride the momentum at that point. I don't have to be aggressive with it because it's not a rush play. You don't want to rush into one of these plays because you never know when an environmental hang up can happen, whether it be they have a rare flower that they have to transplant on the mountain, or some baby bird's nest is in the hills or the trees, and it slows down the operations. These are all headwinds that could hit a mining stock and slow them down. So that's why I'd stay away from options on them, but I love having them in the portfolio. I think they're worth the safety and also the explosive upside. So something to consider and add in your wealth building portfolio. I hope everybody's getting rich. I just want to kind of get a couple of these videos out and start talking about it and create some conversation. We'll dive into some more rare finds or get into more details, but these are just kind of introductory little check these out kind of plays. So PPTA, antimony, watch for it in the headlines. It's going to be a big deal coming up in the next couple years. I wouldn't be surprised if we have a shortage and prices spike and all that stuff too. So just here to share my information and hope you guys can all make quality decisions and get rich. So build wealth together.